In this video, I'm going to be talking about arguably one of the greatest companies of all time. It's a company that is at a bit of an inflection point right now, and there's a lot of overall uncertainty when it comes to the business. So I'm going to do a bull versus bear case on this company and give my overall thoughts, because I know a ton of investors own this stock. A ton of investors have owned this stock for a very long time and for very good reason. But there are some underlying elements of the business that are changing, which can kind of be an indication that we have a high growth company that is slowly moving towards being a slower growing, mature business model that might not keep up to its peers. So I'm going to dive into this company in this video and give you my insight, my overall thoughts as to whether or not I would own it or not. And it's just going to be a great video overall, because I know this is a very popular stock. So you're going to want to watch this right to the end, because I do have a lot of important data about the company. As always, everybody, there's a ton of free resources in the description, including my top holdings, a report on my top holdings. You can get that, just takes a few seconds down in the description. And as always, if you like the video, head down below, comment, subscribe, like, all that stuff. And let's get right into it with Apple. So I'm not going to waste too much time talking about what Apple does, because I think everybody on this planet knows what Apple does. They are one of the most profitable companies on earth. They had a massive resurgence in the early 2000s after a long struggle. And if you held this stock back then, if you actually held it through all of the turmoil, you made a monumental amount of money. But in terms of what the company does, I mean, you're talking devices, you're talking services for those devices, cloud platforms, app stores, accessories, iPads, iMacs, iPhones, things like that. They are a device company with a ecosystem that is just, it probably can't be matched. So the bull case for this company right now is that services growth. When we talk about services with Apple, we're mostly talking about its App Store, iCloud, Apple Music, things like that. And this element of the business is one of the faster growing right now, and it's also the higher margin business. And the main reason services benefits so much is it has the benefit of being exposed to a very wide device base. Essentially, the more people that have iPhones, Macs, iPads, things like that, the more people that will ultimately use these services. Now, the services side of the business has much higher margins. It is much more profitable. And as you can see, it makes up around 25% of the company's total revenue at this point in time. But if we look backwards, it's starting to make up a larger portion of revenue, especially as device sales slow. If the company can continue to drive outsized growth in its services segment, this will ultimately get down to the bottom line quicker, because the margins are much higher and it should increase profitability. I mean, we're looking at the services end growing at a 18% pace versus only around 8% growth company-wide. And the second bull case kind of comes from the first one with its services segment, and that is just the Apple ecosystem. Once people buy Apple products and start to utilize all of the different functionality of Apple products, whether it be different apps, Apple Music, cloud storage, media storage, things like that, people tend to stick with Apple. Now, one reasoning for this is once people are kind of ingrained in a particular system, a particular ecosystem, they don't really want to go through the troubles of switching. You can think of somebody who's held an iPhone for the better part of a decade. They are integrated in that ecosystem extensively, and all of a sudden you tell them that they have to switch to an Android phone. They have to kind of begin the process all over again, learn a new device, kind of sign up with Google Cloud versus something like Apple. They got to change all that over. It becomes a situation where people they don't want to deal with it, so they will continue to buy iPhones. In addition to this, Apple products are much simpler than Android products, and a lot of people don't want to deal with the tech savviness of an Android, so they stick with the simple structure of an iPhone. This is one of the biggest draws for the company. Now, the third bull case would be brand loyalty. This is arguably unquestioned. This is one of the most loyal customer bases in history towards Apple products, and it actually came from Warren Buffett. I can't remember when he said this, but he had mentioned If you go to an iPhone user and offer them $10,000, but they have to give you their iPhone and they can never buy another one again, they would have to go to Android, let's say. He said people would not do it. And I tend to agree with this. People would not do it. They love their iPhones, their iMacs, their iPads that much. It is that sticky. And he kind of made the joke as well. If you approach somebody who owned a Ford and said, I'll give you $10,000, but you can never buy a Ford again, they would just go buy a Chevy the next day. They take the money, buy a Chevy. This is how strong Apple's brand is, and this is very obvious in the real world today with their iPhones, their Macs, their Apple Watches, things like that. When you combine all of this together, you have a company that has an extremely loyal customer base. They have a strong ecosystem that can generate more money off that customer base, and it creates an element of stickiness where people do not want to leave Apple because they are so intertwined in its system. Now, the final case would obviously be the shareholder friendliness of this company. I mean, it just reissued, I believe it was a $100 billion buyback program. In addition to this, it has a growing dividend. It's higher yielding than the other tech names that just introduced it. Apple is a company that rewards its shareholders extensively. I'm going to go over in a bit in the bear case why this is kind of an issue due to a lack of growth, but there is no question this company is very friendly to shareholders and will reward you by being an owner on the buyback front and the dividend front. So now let's get into the bear case, and this is kind of the meat and potatoes of the video, you could say, because there is a lot of scrutiny on Apple right now, and I do believe it is for very good reason. The company's innovation pipeline is definitely suffering. There's no question about that. Apple is well known for making very few changes to devices and rolling out new models. And the one thing about this is it worked very well pre-pandemic, and it worked exceptionally well during the pandemic when discretionary spending was sky high. People really didn't mind, paying, I think probably back then, $1,200. They're up to like $1,700 now, especially on a discounted phone plan. They didn't really mind upgrading their device. That environment has completely changed. Revenue across pretty much every device segment of the company has effectively flatlined since 2023. Obviously, what did we get in 2023? Rapid inflation, higher interest rates, or at least the tail end of things. We had higher rates. Rapid inflation was more so on the 2022 side. But the thing is, people are holding on to their phones longer. So back in 2020, the amount of iPhone customers whose devices were more than 2 years old, that was 60%. Fast forward till now, it is nearly 75%. People are holding on to devices longer because A, they are too expensive. Discretionary spending is not as high as it once was. And B, Apple really isn't changing a lot to these devices. I mean, you can't just go out and change the colors, make the camera a little better, make the phone thinner. That stuff does not move the needle anymore, especially with how expensive these devices are. People just do not care about that right now. And instead, they want the added functionalities, large shifts in cell phones, especially when it comes to AI. And you've seen a company like Google roll out the Pixel 10. The functionality between the Pixel 10 and even 2 devices ago is enormous. It is a much different phone, whereas the Apple iPhones, they just haven't really done that recently. And the second bear case kind of rolls into this would be the valuation relative to the company's growth. So this is a company that is expected to grow earnings in the high single-digit pace over the next 3-4 years, which this is not all that bad of a growth rate. But when I get into the buyback segment here, you're going to understand a bit why the growth actually isn't this high. It's mostly being fueled by buybacks. But in addition to this, Apple trades at 31x expected earnings, and it trades at nearly 40x trailing 12-month free cash flows. This is a very, very high valuation for a company that is growing at this pace. You can buy companies like Microsoft, you can buy companies like Google for much cheaper, and they're growing at a much faster rate, and they have more exposure to AI infrastructure, which is not a guarantee to pay off all of those capital expenditures. However, if it does, there is likely much more growth in those companies versus a company like Apple, who has been criticized often for having arguably the weakest AI rollout out of any of these tech companies. The valuation at this point in time, I believe, is factoring in the stickiness of the business, the brand loyalty, things like that. But ultimately, this company is going to need to pick up the pace of growth in order to justify this valuation. And when we look to the large-scale pace of share buybacks, we can get an idea that the vast majority of growth is coming through these. Since 2023, despite all these share buybacks, the company's free cash flow per share has actually declined by 6%, and its earnings per share have only increased by around 7% over that time frame. But when we think about it, the company has bought back around 6% of shares outstanding over that time frame, and ultimately buying back shares increases earnings per share because there's less shares on the market. So there has effectively been no earnings growth from this company over the last 2 years, and there has been a decline in free cash flow per share. Now, this could be an element of increased capital expenditures, things like that, but there hasn't been a lot of growth with this company, since 2023, which does bring in large-scale issues, especially considering you're paying 30x expected earnings for this company, whereas a company like Google trades at 23x and it's growing at twice the pace. Now, the company should have a bit of a cushion here in terms of the services business because I could still see that growing at a, 16, 18% pace like it hasn't in the past, but this will eventually catch up to it. It needs to provide more products, more innovative products to get more people, a larger installed user base, more devices equals more revenue for the services side. I really think that services can only keep up for so long, and the company really has not done that good of a job at innovating and creating new products. We can look to the Vision Pro, which I wouldn't call an outright disaster, but it was a massive, massive miss for this company to release a $3,500 VR headset during a time when consumers can barely afford rent. So overall, I'm not a huge fan of Apple here. Now, don't get me wrong. I think this is one of the best companies on the planet. I mean, they generate a ton of profit. They return a ton of that profit back to shareholders. My dislike of the company is primarily relative to its valuation. I just think this is a company that if they don't kind of, change things up here and develop some new products, roll out some new AI functionality that really drives people to upgrade their phones, buy new devices, install more apps, buy more subscriptions to Apple overall, I think it's going to turn into a more mature, slower growing business that buys back a lot of shares, increases earnings, which again is a beautiful thing for a lot of shareholders. But at 31x earnings, these types of mature companies, they just don't trade at these types of valuations. And if Apple continues to struggle, we might see a bit of valuation re-rating, I guess. They might, the market might start paying less for a company like this, which could cause the company to lag the index, which it really has struggled over the last year due to just a lack of growth. In addition to this, obviously we have Buffett, who has moved on from a gigantic chunk of his Apple position. Now, I do believe the bulk of this was just the fact that they were way too heavily concentrated in Apple, being such a huge chunk of their portfolio. But I also do feel it's also an element that Berkshire kind of views Apple as a little bit too overvalued here relative to their growth, so they've trimmed their position as well. Again, this is a great company. It's an amazing company, but I just, I don't see it moving the needle here all that much in the future unless it really starts to develop a lot more products that just make it so that people just have to upgrade. We're not seeing this anymore. We're seeing people keep their devices longer. We're seeing people not really be incentivized to upgrade for minor details. And if this continues, I don't see anything happening in the next, 3 to 5 years here, because the services end of the business will ultimately pick up a lot of the slack. But this is a long-term concern that I'm definitely personally concerned with, which is why I wouldn't really pay 30x earnings for this company. So everybody, hope you like the video. Head down below, like the video, subscribe to the channel, comment down below. Let me know if you like me covering US stocks. I know I do a lot of Canadian research on this channel, but I thought I'd mix it up, bring in some US stocks so that investors can get a mix of both. I will be continuing to focus on Canadian stocks as well, but let me know if you like it. And as always, down in the description, there's all that, free resources, including research on 3 of my top options for 2025. I've got my top 4 holdings in my portfolio. I have a dividend case study. It's a ton of free resources down there. You can grab it absolutely free. It just takes you a few seconds. And we'll see you next time for more great investing content.